Let's talk about something that sounds, well, pretty much impossible. Can you really build a life-changing fortune, a 1 crore rupee portfolio, on a modest salary? Today, we're not just going to ask the question. We're going to walk through the exact math, the strategy, and see if we can turn a 15,000 rupee salary into a 1 crore reality. It sounds crazy, I know, but stick with me. The numbers might just blow you away.
So let's just put the question right out there. Is it even possible to become a crorepati on 15,000 rupees a month? Or is that just a financial fairy tale? Well, we're going to break it all down step by step and find a real, data-backed answer to that very question.
You know, every massive goal starts with a simple first step, and our journey to 1 crore begins with a plan that anyone can follow. We're not getting tangled up in complicated schemes or anything like that. We're starting with the absolute basics, the foundation of building wealth.
And that foundation is the good old 50-30-20 rule. It's super simple. 50% of your income goes to your absolute needs. You know, rent, groceries, the essentials. 30% is for your wants, the fun stuff like going out or that new gadget. And here's the most important part. A solid 20% right off the top goes straight into investments. This isn't just what's left over at the end of the month. This is a priority. So for a salary of 15,000 rupees, that 20% works out to exactly 3,000 rupees a month. That's our starting number. It's real, it feels doable, and believe it or not, this is the seed that's going to grow into our 1 crore fortune.
Okay, now for this all to be realistic, we need to agree on 2 ground rules. First, we're assuming you'll increase your investment by 10% every year, right? As you get a raise, your savings should grow too. And second, we have to account for inflation. We'll pencil in about 5% per year. This is so important because a crore in 30 years is not going to have the same buying power as it does today. We need to know its real value.
All right, so we've got our 3,000 rupees a month ready to go. The big question is, where do we put it? Well, to figure that out, let's set up a little race. We'll pit some of the most popular investment options against each other and see which one can actually get us to the finish line.
First up is our safest runner, the fixed deposit, or FD. After 10 years, you've got 7.5 lakhs. But look at that real value column. Inflation has already cut that down to just 4.6 lakhs. Fast forward 30 years, and yeah, your portfolio hits that magic 1 crore mark, but its actual buying power? Only 25 lakhs in today's money. So the verdict is clear. FDs are safe, but they're just not going to make you wealthy.
Okay, contestant number 2, gold. It definitely runs a faster race than the FD. After 30 years, your portfolio is showing a very nice 2 crores. But again, let's look at the real story, the real value. That 2 crores is actually worth about 47 lakhs in today's money. It's better for sure, but we're still not even halfway to our real goal of 1 crore.
Now for the stock market, starting with a nice diversified Nifty 50 index fund. This basically lets you invest in India's top 50 companies. And you know what's interesting? The performance is, well, it's surprisingly close to gold. You hit that 1 crore portfolio number in 25 years, but in today's money, that's only worth about 31 lakhs. This is a huge takeaway. Even just dipping your toes into the stock market this way isn't quite the magic bullet we need.
So the race has made one thing crystal clear. The traditional, safe ways of investing are just too slow. Inflation eats them for lunch. To actually win this thing and build real wealth, we need to find something with higher growth. But that immediately brings up the big, scary question, doesn't it? What about the risk?
Let's just tackle that fear head-on. Because for so many people, the words stock market are basically a synonym for risk. But what if I told you that the best tool for crushing that risk isn't some complex financial trick, but something that every single one of us has? And that's time.
I know what you're thinking. Isn't this just a big casino? Am I not just rolling the dice with my hard-earned money? That's the thought that stops so many people from even getting started. So let's see what the actual data, the actual history tells us.
Okay, look, if you invest in the Nifty 50 for just 1 year, then yeah, it can feel like a gamble. Historically, the worst 1-year performance was a 20% loss, and you've had about a 1 in 4 chance of losing money in any given year. So in the short term, that risk is absolutely real, no doubt about it. But here's where everything changes. Just watch what happens when we stretch our timeline out to 5 years. All of a sudden, the worst historical return flips to a positive 5% gain. And look at that number on the right. The historical chance of losing any money at all over a 5-year period, it drops to 0.
And this is the knockout punch. If you stay invested for 10 years or more, based on all of our past data,
not only is your chance of losing money still zero, but the probability of earning a return of more than 8%, which easily beats an FD, is 100%.
So, what's the big lesson here? It's that time is your greatest superpower. It's your ultimate defense. It takes all that scary short-term up and down volatility and smooths it out into a reliable engine for growth. The game isn't about timing the market, it's about your time in the market.
So now that we understand that time is our friend, not our enemy, we can build a much more powerful strategy. We can create a formula that uses a little bit of calculated risk to chase much, much higher growth. This is the formula that can actually win the race for us.
And here it is, the winning formula. We're still using a diversified portfolio, but we're getting a bit more aggressive. We're splitting our investment 50-50 between a mid-cap index fund, that's medium-sized companies, and a small-cap index fund for the smaller guys. Why? Because these companies have more room to grow than the giants in the Nifty 50. And historically, this kind of blend has delivered a really powerful average return of around 16.5%.
And now, look what happens when we put that formula into action. The results are just stunning. You crossed the 1 crore portfolio mark in only 20 years. But don't stop there. Look at year 30. Your portfolio has ballooned to over 6.7 crores. And this is the most important part. Its real value, its actual purchasing power in today's money, is a staggering 1.5 crore rupees. We didn't just meet the goal, we completely smashed it.
Let's just pause on that number for a second. 1.5 crores. In today's money. All of that, starting from just 3,000 rupees a month, and having the discipline to just stick with the plan. This isn't just a number on a page. This is what financial freedom actually looks like.
Okay, we've gone through the math, we've taken on the idea of risk, and we've seen how to beat it. We have the winning formula. So now, we've arrived at the single most important part of this whole thing, turning all this knowledge into action.
Because after seeing all this, it should be pretty clear. The biggest financial mistake you can make isn't picking the wrong investment. It's not investing at all. It's sitting on the sidelines while the power of compounding passes you by. Every day you wait is a day of growth you can never get back. The most important thing is to simply begin.
So I'll just leave you with this one last thought. You now have the roadmap. You've seen what the destination can be. The only real question left to